Welcome to Tesla Deep Dives.
The topic today, the Cybertruck's production paradox, quantifying the shambles versus the global ramp-up thesis, an investor deep dive.
5 years of hype culminated in the Cybertruck's launch, but for investors, it represents a paradox, a symbol of Tesla's innovation thesis battling the grim reality of a production shambles. CEO Elon Musk initially set the stage for the negative narrative himself, admitting the company dug our own grave with Cybertruck, calling the ramp-up extremely difficult. The question is no longer if production is difficult, but whether the difficulty is a temporary production hell 2.0, paving the way for a 250,000 unit per year global ramp, or a permanent, costly drag on the balance sheet. The bull case was anchored on a rapid ramp, with Elon Musk targeting an annual run rate of approximately 250,000 units sometime in 2025. However, verifiable delivery numbers tell a story of stagnation. After a respectable 38,965 units sold in 2024, U.S. sales plummeted 48.1% in 2025 to just 20,237 vehicles, according to Cox Automotive estimates. Crucially, Q4 2025 U.S. registrations saw a catastrophic 68.1% year-over-year collapse to 4,140 units, highlighting a significant disconnect between ambition and execution.
The root of the shambles narrative lies in the complexity of the Cybertruck's core components. The unique, ultra-hard stainless steel exoskeleton proved challenging to manipulate and bend on the factory floor. Compounding this is the persistent scaling issue with the proprietary 4680 battery cell. In late 2023, the 4680 production rate was only sufficient to power fewer than 25,000 Cybertrucks a year, far short of the 250,000 annual goal. This bottleneck is reportedly tied to difficulties scaling the unproven, high-yield dry coating electrode process. Production woes translated directly into a demand problem for the high-priced variants. By May 2025, a reported inventory surplus of 10,000 unsold Cybertrucks represented over $800 million in tied-up capital, while Gigafactory Texas utilized only 1/4 of its 125,000-unit annual capacity. Quality control issues amplified the sentiment, with owners reporting everything from panel fit misalignment, dismissed by service as in-spec, to concerns over rusting panels and software glitches, which led to a major recall in March 2025 affecting 46,096 vehicles. For investors, the Cybertruck has added financial pressure. Automotive gross margins for the company have stabilized lower, around 16% to 17%, down sharply from the 25% plus peaks of 2021. Furthermore, the truck has suffered alarming depreciation, a major financial risk for a high-end vehicle. A $100,000 Cyberbeast model was reported to have depreciated to $65,400 after just 6,200 miles, a 34.6% loss in under a year, far outpacing the depreciation of rivals like the Rivian R1T. Financial opinions are polarized. On the shambles side, analysts from Wolf Street have gone so far as to label the Cybertruck a failed model, citing its polarizing design, high price point starting at $60,990, and quality control issues. In contrast, long-term bulls still support the ramp-up thesis, viewing the current issues as temporary, standard Tesla pain required to eventually hit 170,000 units in 2025. Market sentiment, however, has recently been dominated by the negative narrative, as evidenced by the stock's reaction to the Q4 2025 delivery miss. A new narrative is emerging. The Cybertruck is now a secondary focus. Tesla is aggressively rebranding as an AI and robotics powerhouse, refocusing investor attention on the trinity of the Cybercab, Optimus robot, and full self-driving. This pivot suggests a strategic acceptance that the company is trading today's margin for tomorrow's moonshot, meaning current auto sales, including Cybertruck, are less critical than the long-term AI play. The Cybertruck's slow ramp has cost it market dominance. In Q1 2025, it lost the title of the best-selling electric pickup truck in the United States to the Ford F-150 Lightning, which appeals to a broader, more traditional truck-buying demographic with more accessible pricing.
The F-150 Lightning outsold the Cybertruck by over 7,000 units in 2025, 27,307 versus 20,237, a clear indication that a polarizing luxury EV truck, priced up to $99,990, cannot yet displace the mainstream incumbents.
Investors must monitor two critical indicators for the remainder of 2026. First, the actual volume of the lower-priced single-motor rear-wheel drive (RWD) variant, which is rumored to be priced around $60,000. A strong launch of this model is the only near-term catalyst that can validate the latent demand thesis. Second, watch for official updates on the 4680 cell production yield. The ability to scale the dry coating process remains the ultimate physical constraint to hitting the 250,000 annual run rate target.
The Cybertruck's production paradox is resolved. The shambles narrative currently dominates. The vehicle is a costly, low-volume, special product, as Musk described it, that has failed to deliver on its volume ramp-up promise, evidenced by the 68.1% sales plunge in Q4 2025. The prediction is that the Cybertruck will remain a niche, low-margin product in 2026, failing to meet the 250,000-unit annual rate. Its true investor value has shifted from a volume driver to a high-tech halo product that justifies the company's long-term bet on revolutionary manufacturing processes and materials, which may only pay off in the next generation of Tesla vehicles, not this one. Let me know what's your thoughts and leave your comments. Thank you for joining us for this deep dive. To ensure you never miss a pivotal analysis, please like the video, subscribe to the TeslaDeepDives channel, and hit the notification bell. Your engagement fuels our critical research.